Next, we ought to see the origin of the bank and its paper to see how loans have been made and how, by what means, a debt has been created. This compels us to go back and trace minutely the bank and the debt from their fatal birth to the present time to show how they arose both together and how they have gone swelling mountains high. Well, back then it was in the millions, now it's in the trillions. Side by side, while taxes, pauperism, misery, and crimes have all gone on increasing in the same degree. Saturday, February 22nd, 2025, Maneco 64, home of alternative economics and contrarian views. Well, today we're going to look at Cobbett's paper against gold and the mystery of the Bank of England. Before I got this book, I'd never heard of William Cobbett, and I think few of you have heard of him. And it's no wonder, because he was a champion of the people, a champion of sound money in the UK, yes, in the early 1800s. So we'll touch upon that today. But before we do, we're going to look at gold and silver. And today we're going to look at gold and silver and their relationships to the stock market, to the bond market, and we'll touch upon the US economy very quickly. But before we do, I like to give a shout out to Gold Investments, my precious metals dealer affiliate here in the UK. They've got a new promo code, which is below in the description, for those of you who want to buy various dates sovereigns. That means that any sovereign prior to 2025, right? The promo code is Maneco 64 SOV, S-O-V. You will get 1% off the listed price online. And I also like to give a quick shout out to Dirty Man Safe. In these turbulent times, it's more important than ever to try to keep your valuables safe, be it gold coins, silver coins, or any other cherished items that you have. So Dirty Man Safe is underground safe solutions, hidden protection, and instant access. And I've got a link below as well with a 10% discount. You also get a free gift when you order your Dirty Man Safe. So everything's below in the description. So back to gold and silver before we look at William Cobbett. And I've always said, and I'm not the only one, people like Pierre Lassonde, for example, like a giant of the mining industry, he said he expects the Dow gold ratio to eventually go back to 1-to-1. And it sounds outlandish, but historically it isn't. And why is that? Well, because back in 1932, we went down to 2-to-1. Back in 1980, we went down to close to, well, basically 1-to-1. So the trend is, well, over the very long term is down. And I think we are approaching a monetary event. I'm not saying it's going to happen tomorrow or next week or next month or next year. I think it could take another 2 to 3 years. If you look at the 1932 event and you add 48, you get 1980. If you add 48 to 1980 or 47 thereabouts, you get 2027, 2028. So I think there's a cycle there for the Dow gold ratio. And I've been following it on and off. In the last few years, there hasn't been much happening. But as you can see here by this chart, we're breaking down. So what does that mean? Well, first of all, this ratio basically tells you how many ounces of gold you need to buy one Dow Jones Industrial Index. So back in the late 90s, early 2000, beginning of the century, it took over 40 ounces of gold. That's when gold bottomed at $252 an ounce. And you can see that by 2011, it looked like we're going to go back to 1-to-1, but it didn't. Why is that? Well, because I think the central banks and treasuries of the world threw the kitchen sink at everything. And yeah, it got the stock market going again. Debt at the time wasn't as bad as now, so it worked. And we've been basically hovering between, let's say, 15 and 21 for the last 7 years or so in this Dow Gold ratio. And I've put up the Fibonacci retracement, and I'm a great fan of the Fibonacci numbers. And I remember when I started out in the futures market at GNI in London in 1993. Before that, I was more in the cash market, bond markets. One of my colleagues mentioned the Fibonacci number, and I had no idea what he was talking about. And he explained everything to me, and that's how you learn. You ask questions, and a lot of times people are willing and very happy to tell you about it. Of course, some people aren't. So basically, Fibonacci was a mathematician in the, I think, 1200s or something, or 1300s in Italy. And he found that in nature there's like a sequence, and it's all based on maths on these Fibonacci numbers. And one of the important numbers is 61.8%. A lot of times in markets, we see a big move down or up, and then we see a correction. And a lot of times, the correction doesn't go past the 38.2% retracement of that correction. A lot of times it goes to the 50%. But as you can see here, I just looked at this yesterday, and I thought, wow, look at how perfect, almost perfect this is. And of course, numbers and markets are like nature. They're not perfect. Spring sometimes comes earlier or comes later. But you can see that back in 2018, we did go above 20.74, which is the 38.2 retracement, but it didn't stay there that long, and it tried to get back above that line a few times over the years, and it wasn't successful. And now we're breaking, and this Dow Gold ratio is at almost 5-year lows. So actually, in terms of real money, the Dow is starting to keel over. Not so much in the fiat dollar for now. Eventually, I think we're going to go to 1-to-1 or even less. We could see us needing less, maybe half an ounce of gold or 3/4 of an ounce of gold to get one Dow Jones Industrial Index. So now let's go to silver, because silver is starting to look quite interesting as well. And with silver, I've done it versus the S&P. So this is how many S&Ps you can get for an ounce of silver. And you see this big spike here. This was January 1980, the top of the this trend line I drew. And with 1 ounce of silver, you could almost get 0.4. That's how significant this move up in silver to $50 was. But ever since then, this ratio has been going down. It's in a bear market, but if you really look at the bottom, it was in 2000. So actually, the whole century, this whole century, silver has outperformed the S&P, even though it hasn't been a huge outperformance. Of course, it's come off a lot since the high we saw in 2011. And at that time, you could get almost 0.04 of an S&P, 10 times less actually than you could in 1980. But as you can see here now, I think we've found the bottom, and you can see there's a falling wedge, and we're getting closer and closer to the top of this wedge. And I think once silver breaks out relative to the S&P, it will be quite amazing. There's so much potential and so much value, in my opinion, in silver relative to the general stock market. So, and as I said, this is not going to happen next week. It's going to be over the next few months, few years, in my opinion. And I actually expect eventually this ratio to break through that long-term trend line, and that will be really explosive. And before we go to William Cobbett, I just wanted to show you as well gold versus the 10-year note or treasury. So gold is not just outperforming stocks in the last 25 years, and silver for that matter. And it's really shocking that less than 1% of investable assets in the United States and probably throughout the world are in gold. So financial advisors and fund managers are still heavily undervalued in terms of have a very little exposure to gold. So even if let's say gold goes to 2%, that's already that's huge already. Can you imagine if it goes to 10% of investable assets? And I think there's a potential for that. So it's the same thing here. Gold is outperforming. It's being able to buy more and more bonds or treasury notes in this case. And quickly, just wanted to show you this. We had some numbers yesterday in the US. You can see existing home sales. They dropped from 4.29 to 4.08. Why is that, in my opinion? Well, existing homes, people who have long-term mortgages that were fixed very low, they don't want to move, because if they move, they're going to have to remortgage at a much higher price. And I think that's going to continue. 5-year inflation expectations, University of Michigan, well, 3.5 doesn't look very good, Mr. Powell, and it was higher than expected. Consumer expectations, they've dropped from 67 to 64. They're expected to stay unchanged. Consumer sentiment as well is dropped, and current conditions is kind of crashed from 74 to almost 65. So maybe the stock market knows something. So back to William Cobbett, sorry, and paper against gold. And why am I talking about this today? Well, because what's happening at the Bank of England and vis-a-vis the LBMA has everything to do with what William Cobbett tried to warn the public against over 200 years ago. So let's first read a little bit about William Cobbett on Wikipedia. So he was born in 1763 and died in 1835. He was an English pamphleteer, journalist, politician, and farmer, born in Farnham, Surrey. And it says here, Cobbett backed lower taxes, saving, reversing commons and closures, and returning to the gold standard. So I'm going to scroll down and go to the part that I think is important today as far as Cobbett is concerned. So it's the period between 1810 and 1812. It says prison. Cobbett was found guilty of treasonous libel on 15th of June 1810 after objecting in the register to the flogging at Ely, Cambridgeshire, of local militiamen by Hanoverians. I guess that's the Hessian troops. During his 2 years of incarceration at Newgate prison, he wrote the pamphlet Paper Against Gold, warning of the dangers of paper money, and many essays and letters. His daughter Anne lived with him in prison. On his release, a dinner in his honor in London was attended by 600 people. That's how popular he was. And directed by Sir Francis Burdett, who, like Cobbett, was a strong advocate of parliamentary reform. So how come we haven't heard that much about this guy? We hear about John Maynard Keynes. Well, I would say because he was very critical of the Bank of England and the status quo, the establishment, debt. And isn't it interesting that he was a good friend of Thomas Paine, who wrote Common Sense? He went into exile to the United States a couple of times in his lifetime. And he was an MP towards the end of his life, I think 1832 to 1835. And why was he put in prison? Well, he pissed off King George III. Yes, that King George III, because he criticized him for using foreign troops to keep the order on English soil. And I think he was right, but back then, if you criticize the king, you were in trouble. But maybe there was a plus, a positive that came out of this, because he wrote his letters to his supporters and to the public while he was in prison at Newgate. There's two editions of this. This is the one I first bought, and this has never been, there's no copyright or anything. It's just the copies of the letters, and some of it is really difficult to read. So one of the longtime followers of this channel sent me this one. I think this is a little easier to read, but yeah, either one I think will do. So what I'm going to do here is read part of the introduction just to give you a taste of what William Cobbett talks about. Yeah, I'm going to take these off because it's easier for me to read. So there we go. Cobbett's Paper Against Gold, containing the history and mystery of the Bank of England, the funds, the debts, the sinking fund, the bank stoppage, the lowering and raising of the value of paper money, and showing that taxation, pauperism, poverty, misery, and crimes have all increased and ever must increase with a funding system. So what's a funding system? Well, it's the national debt, and the fact that the national debt has to keep increasing, and it never ends. And the way to keep it going is through taxing people to pay the interest on the debt to the people who own the debt, the bankers, right? Okay, here we go. This is from 8th of February 1817. So this is after he was in prison, but it's an introduction to the series of letters that he wrote there. It says, the time is now come when every man in this kingdom ought to make himself, if possible, well acquainted with all matters belonging to the paper money system. It is the system which has mainly contributed towards our present miseries, and indeed without that system those miseries never could have existed in anything approaching towards the present degree. Well, the same thing is happening now. In all countries where a paper money, that is to say a paper which could not at any moment be converted into gold and silver, has ever existed. In all countries where this has been the case, the consequence, first and last, has always been great and general misery, and in most such cases, such misery has been productive of that confusion and bloodshed, which I most anxiously hope will be prevented in this instance by timely measures of a just and conciliatory character by the good sense, patience, and fortitude of the people. To be able clearly to trace our miseries to this grand cause, the bank and he means the Bank of England, the bank and the paper money, it is necessary that we inquire into the origin of money, how it acts upon the affairs of men, how prices depend on its quantity, and how money itself is changed in its quantity and value. Next, it is necessary that we come at a clear idea of the origin of paper money and of its introduction into this country. Well, that was 1694 with the creation of the Bank of England, and that's when the national debt started accumulating. Next, we ought to see the origin of the bank and its paper, to see how loans have been made and how by what means a debt has been created. This compels us to go back and trace minutely the bank and the debt from their fatal birth to the present time, to show how they arose both together and how they have gone swelling mountains high. Well, back then it was in the millions, now it's in the trillions. Side by side, while taxes, pauperism, misery, and crimes have all gone on increasing in the same degree, we ought next to inquire whether it be possible to lessen the debt by the scheme which has been called sinking funds. Then we ought to enter into all the facts of that curious event called the bank restriction, which was a stoppage of cash payments. Well, cash payments mean redeeming promissory notes in gold and silver specie at the bank in violation of the bank charter and of the laws of debtor and creditor. So I'm going to stop right here. I highly recommend you get one of these. I think it's better than this one in terms of how easy it is to read. But what he said there is really interesting. That bank restriction was during the Napoleonic Wars from 1797, I think, until 1821. I might be wrong there at the end date. Well, the Parliament in this country stopped people from being able to take their promissory notes, their bank notes, to the banks and get real money, i.e. cash, gold and silver. And yes, that was against the bank charter. So they will break the rules, these people, when they're desperate. And the reason I'm talking about this is because of what's happening now at the Bank of England. The fact that there's a mystery surrounding, what's going on with the gold, the mystery of the Bank of England. And one of the things he says in some of his letters is that these people, these bankers, they use terminology that seems really complicated to the common man, to the layman, like things like sinking fund, debentures. But in the end of the day, it's all about the debt and money. Like here now in the present, they use terms like unallocated, allocated gold, and T+2, T+60. It's all to make it all very complicated to the common man, so he doesn't ask questions. So what does it really mean, allocated and unallocated? Well, it's just a way to hide the fact that the Bank of England they don't want the public to know how special gold and silver are in terms of maintaining your purchasing power, and that's why the Bank of England keeps so much gold. And it seems a paradox, doesn't it? But if you want to control something, you need to have some of that thing to control, to make sure that people don't wake up to it. And that's how they do it in this LBMA paper market. So how does it work? Well, basically, they create endless supply of gold to keep the price down, to keep the public unaware of what's going on, of the fact that they're creating a lot of paper money out of thin air, because that's their game. They want the paper money game to go on forever, because that enriches them and their friends. And it keeps the public in poverty and working for them. So that's why this is huge. And I think and I hope that the LBMA and this paper scam is on its last legs. And that's why I brought up William Cobbett. And now you can probably understand why William Cobbett hasn't probably is not studied at universities, like major universities in economics. It's because of that. And it says here on Wikipedia, advocacy for the English poor and working class. So yeah, that's what William Cobbett was all about. And that's why you probably never heard of him, but now you're hearing of him from this channel. And tomorrow, of course, we're going to have the live stream with Clive at 8 p.m. UK time, 3 p.m. Eastern time. And we might have a special guest. I'll keep it a surprise. So with that, I'm going to wish you again a great weekend. Take care. Bye.